Good morning and welcome back to Almus Market Mornings. The fluidity of financial markets can be seen in days like yesterday. Now, what I mean by that is in today's world, it's very easy to see how quickly money moves and positions can be unwound. We are in a situation of everything sell off, whether it is crypto, stocks, precious metals, major asset classes have been sold and treasuries have been purchased. The US 10-year was down almost 10 basis point yesterday, and largely lower yields were seen in other major economies as well. These kind of moves are resulting in data being sidelined and monetary policy decisions seeming like non-events. But we do have RBI MPC decision today, which is likely to maintain status quo. Good morning, JK. What are your thoughts on this broad market sell-off and your expectations from today's MPC decision?
Good morning, Swaraj. Yeah, as you rightly put it, I think the economic events and even the monetary policy decisions are taking a backseat now. And it's all due to extreme positioning in the market. We all know how precious metals had moved parabolically in the last few months, and then in January end, they got melted down, and that is continuing. In fact, today morning I have seen silver break 70, which is a big support for the metal, and probably we are now headed towards 55. Gold, of course, is holding up above 4,700, but I'm not sure people are hurrying to buy any of the metals right now. That said, yesterday we had two major central banks decision, but in both the meetings, they left a small opening for further cut on the rates. Like, ECB focused on, they remain data dependent, and they also importantly mentioned the level of, they said they discussed the euro level also. So if the euro continues to strengthen, there can be a deflationary impact, and that can push the inflation even lower. Now, ECB's, rather, Europe's inflation level is now below their target at 1.7%, and that puts some pressure on rates on the downside. And then we had a dovish outcome from Bank of England as well. Sharp downward revision to their CPF forecast to 1.7% in FY27, or rather 27. Is leading people to call for rate cut. And yesterday's decision was a 5-4 majority, 4 people wanting a cut. So that's actually something that market is taking note of, and that's why the GBP got sold off as well. And then on the economic data, we had quite depressing news from US jobs market. Job openings dropped to their lowest level in more than 5 years in December, and they were at they decreased by 386,000, and even the ratio of job openings to the number of people employed dropped to dropped from 1:1 in September to 0.87:1 in December. So that's a big drop, and we also had the job cut that was announced at 108,435 in January, and the highest level since October, and largest January total since 2009. In fact, in 2025, the job cuts are 1.2 million compared to 761,000 announced in 2023. We also had, as we have shared yesterday, the ADP jobs came at 22,000, much lower, and ADP jobs on a yearly basis in 2023 was in the region of 180 to 200,000. Not to forget that jobless claims also spiked to 231,000 yesterday from 209,000, with continued claims also increasing. Yes, as you said, Reserve Bank is in focus, and Reserve Bank, of course, I don't think they change the stance or the rates right now. All focus on the global developments. Of course, the recent trade deals would have given some relief for growth picture, so there may not be any need for immediate support through growth. Focus is more on liquidity, and of course, RBI has already done a lot on the liquidity side. They could announce some more measure. I feel there can be more regulatory measures in this meeting than any policy move that is expected. I think on going forward today, we have only the Michigan preliminary survey, which was higher last month, and this month it's likely to slightly come down. Overall, the dollar index, or rather dollar against the major currencies, is treading water. Yen is in focus. There is a risk of sentiment, but the yen is not gaining as it is traditionally seen to be. And Takachi effect is very much in play. The upcoming election, if she gets a majority, a good majority, then yen can as well be moving above 158, a region where Japanese may intervene. However, if she does not manage to get that kind of majority, you may see again a drift towards 155. That's what is expected. Other currencies are trading water, and some sort of a safe haven bet for the dollar in view of the market sell-off. Rupee, modest flow is keeping it in the range between 90 and 90 half. Good interest from banks on behalf of RBI is seen below 90-10. But that said, I think the upside remains capped because there is no particular interest to buy heavily at these levels. And, the market is still watching what happens going forward because we have been missing flows for a long time. And now it seems like, some flows are coming in. Therefore, market will be only watching out if it 90.60 break, then only there will be some action on the buying side. Otherwise, people look for dips to buy. I think rupee now becomes a slightly steadier currency until something new happens to push it either side. So finally, an interesting thing. Kevin Walsh, whom Trump has chosen to succeed Powell, his appointment confirmation is facing some hurdles in the Congress. Some people want the Powell case to be decided before they can actually go ahead with the appointment of Kevin Walsh. And in one more point of interest, or rather statement from Trump that he thinks Walsh understands he wants lower rates. He would not have gotten the job if he did not understand that he wants a lower rate. So it's a very important statement from market assuming that Kevin Walsh will be hawkish and therefore the rates will not come down. But then whether his independent stance also will be in question is what the market is looking ahead to. Thank you.
Thank you, JK. And yeah, a lot of moves in markets. Extreme positioning has resulted in these kind of sell-offs. Whether it is the AI bubble or metal side, we had the silver and gold, the rally, especially silver, which has rallied quite significantly and now facing quite a big sell-off. Today morning, it seems even silver has broken $70 an ounce, which is a big support for the metal. As of now, no major buys seeming to emerge at these points. When it comes to rate decisions, both ECB and BOE kept rates unchanged. But interestingly, as JK mentioned, if euro keeps on strengthening, it can have a deflationary impact, and that's what the ECB is also saying. And if it remains, inflation remains below target, there can be another cut. And even when it comes to BOE's decision, it was tricky, 5-4 vote for rate cut. So barely they held rates. And data, of course, from other regions seem to have been sidelined. Challenge job cuts, which showed a significant figure of job cuts for the month of January. It did not entail any major reaction. RBI is also unlikely to cut rates or change its stance in today's decision. Focus will be on liquidity measures, and there may also be some regulatory measures. So we'll see broadly how all of this plays out. That's it from us today. Thanks for listening. Have a very good weekend. We'll catch up on Monday with a fresh round of updates.